Hello, everybody. My name is Belyadi. Today, I want to talk to you guys about a very important concept that people always ask about. People always ask, how much money do I need to spend on marketing? What percentage of my revenue should be spent on marketing? And the answer to this question is very simple. It depends on what revenue target you have. If you want to be $1 million company, if you want to be a $2 million company, if you want to be a 10, 50, 100, 200, $1 billion company, this is the first thing you need to ask yourself. What revenue target do you have? Let's just do simple math. Let's say your revenue target is $1 million. Revenue target is 1 million. Okay. That's where you want to be at the end of the year. The next question is, what is your average ticket price? You got to look at the last year of data or last 6 months or whatever you've got. Take the average of your prices, excluding taxes and all that information. What is your average ticket price? Let's just say the average ticket price, I'll just make it up here, is a couple $100. So every time you service a customer, on average, they're spending a couple $100 with you. The next question is, how many customers do you need to service to get to $1 million? Revenue target divided by the average ticket price. So in this case, the revenue target is 1 million divided by the average ticket price is $200. That's 5,000 customers. So you need to service 5,000 customers for the year to hit $1 million in revenue. You need to get leads, whatever your marketing strategy is, whether it's Google, Facebook, Instagram, whatever strategy you have in marketing, that will determine how many leads you're going to get. Let's figure out how many leads you need to get to be able to service 5,000 customers. So that is a function of conversion rate. When a customer calls you, when a customer contacts you, how many of these leads that you get are you able to convert? For example, if you get 10 calls and you're able to book 2 of those 10 calls, your conversion rate is 20%. So as a business, you need to know what your conversion rate is. Just go back through all your leads and see how many leads came in, how many of those leads you booked, and just do the simple division to figure out what your conversion rate is. Let's just say out of 10 people that call you, 5 people book, which means your conversion rate is 50%. If you take 5,000 customers divided by your conversion rate, let's just say 50%, that means you need to get roughly 10,000 leads. You need to get 10,000 leads to service 5,000 customers, assuming that your conversion rate is 50%. Now, one of the biggest areas of improvement for your business is going back and looking at your conversion rate. Can you improve your conversion rate to 90+%? If you can improve your conversion rate to 90+%, then you're going to need a lot less leads to be able to, take yourself to the next level in terms of marketing spending. So 10,000 leads. Now, what is the cost per lead? They call it CPL. What is the cost per lead? You might get 100 leads, 1,000 leads, a million leads a month or a year. What is the acquisition cost to get one of those leads and whether they book or not? So let's just make it simple here. Say your cost per lead is $20. So you're going to have to spend $20 to get a lead, not to get an appointment, to get a lead. Okay. So $20 now, if you take cost per lead times the number of leads that you have, 10,000 in this case. So if you take cost per lead of $20 times 10,000, that's going to be $200,000. So you need to spend $200,000 in marketing to get to $1 million in revenue. Now, here's a huge caveat here. This is to acquire the customers for the first time. Once you acquire the customers, if you can maintain those customers and those customers use your services more than once a year, then that cost goes lower and lower and lower. Let's just say a customer uses you 4 times a year. That is 200,000. Once you obtain the customer, going forward, you can divide that by 4. Now it's going to be $50,000. So to acquire a customer, to get him going initially, it's going to cost you $200,000. That's assuming your average ticket price is $200, and assuming your conversion rate is 50%. If your conversion rate is 90%, it's going to be a lot less. So what percentage of revenue do you need to spend to get to $1 million in revenue? It's pretty simple. You take $200,000 divided by $1 million. That's 20%. You need to spend 20% of your revenue on marketing to get to $1 million. Assuming you have your average ticket price of $200 and your cost per lead is $20 and your conversion rate is 50%. If you want to spend less money in marketing, then you need to focus on improving your average ticket price. You need to focus on increasing your conversion rate to 90+%. And as a result, you're going to spend less and less on marketing. And one last thing that is the easiest to do, or it costs the least amount of money to do, is by providing an experience for the customer. So they'll use your services more than once. When they use your services more than once, and instead of spending $200,000 for the year, if they use your services 4, 5, 6, 7, 8 times, you're going to spend a fraction of that cost to maintain and retain that customer. So knowing these numbers for your business, you have a good fundamental understanding of where you can be. So now if you want to grow your business to $2 million or $10 million, you can do the math, and based on your actual conversion rate, based on your actual ticket price, you can figure out how much you need to spend on marketing to get to $10 million, to get to $20 million, to get to $1 billion. Hope this was helpful. Thanks for watching.